Well, welcome to today's Time Out with Remax, and it's fantastic to have one of our business partners here today, Coetzee, the CEO of BetterBond. Welcome, Carl.
Hello, Adrian. Thank you very much. Awesome to be here.
Awesome. I suppose we're getting used to these Zoom call things now, right? It's becoming a new normal for us.
Man, can you believe it? Can you think about 3 months ago, it was only a selected few that went on to Zoom calls, and now that's just become our life. Eh? It's amazing. It's amazing how things have just changed.
Wish I'd had the foresight to buy a few shares in them, but anyway.
Did you see the valuations of Zoom? It just skyrocketed today. It's amazing.
Yeah. So, Carl, I mean, I know your company very well. We've dealt with you guys for sure. I think I forget if it's 16 or 17 years. I know it's plenty. It's your 20th birthday this year, but BetterBond. Tell us a little bit about BetterBond, because not everybody watching this today is a Remax agent. So tell us a little bit about what you guys do.
Yeah, Adrian, and I think, it's so fortunate been working for BetterBond, because I think what we do, it's not really what we do, but it's why we do that. And that why is about, how do we get more people in South Africa into homes? And that's very much aligned to what you guys do. And so how do we do that? Well, we apply on behalf of you to all the major financial institutions, and we find you the best home loan deal we can. And that is awesome because, buying a home is your biggest expense that you'll make, your biggest financial investment that you'll make. And, if you're flying a lot, Adrian, and I know you do, that often when you fly to Cape Town or to Joburg, you'll go find the best airline ticket for that time. And often customers don't know they can do it with their home loans. Such a long-term commitment. And that, it will be quite silly not to work through an originator that can find you that best home loan at the best sort of interest rate, because it's such a long-term commitment. So that's what we do.
Yeah, it's amazing. I've actually heard that analogy used before with the airlines, and it is interesting because I believe I might have the number slightly out, but I believe statistically 9 out of 10 people will shop around for a cheaper airline ticket, yet only 3 in 10 people, and the airline ticket costs what, 2-3 grand, yet only 3 in 10 will shop around for a home loan where we're talking hundreds, if not millions of rands.
Exactly, Adrian. And, if you can save just 0.25 on your interest rate, that could mean hundreds of thousands of rands of saving throughout that home loan. So, yeah, it is just crazy that people don't necessarily shop around for home loans. But that's why that's what we do.
And am I right in saying, well, I know I'm right in saying this because I've been working with you for a while, but I mean, your service to the consumer is free, right? Like you guys are helping to source a home loan for them to one of the banks. You're trying to find them the best deal, and your service to them is absolutely free, no strings attached.
100% for free. There's not even a single charge to the customer. Often I get because our fees are from the banks, and often I get the question is saying, but yeah, sure, my interest rate will be a bit more expensive because I'm working through you guys because the bank must pay you, and that is just not true. Because we're shopping around for the best possible deal, the banks trying to put their best foot forward. So often we are able to save customers, a lot of money and get them that best interest rate because we go shop around. So yes, the service is 100% for free for a customer, and that's what makes it amazing.
For sure. Now tell me, I know you're a CEO at BetterBond and I'm CEO at Remax. In my world, it stands for Chief Entertainment Officer. But what is it that you do at BetterBond? I mean, I know your title is CEO, but what does that involve really?
Yeah, and I don't like titles, and it's really not about that. But I think what I do is, I've got this incredible privilege of working with 160, 170 consultants in our market that are absolute experts in home finance. Some of these people have been with us for 20 years since the start, and some of them have been in this industry or in the home loans industry for much longer than that, some 40 years. And my job is to make sure that these guys are motivated and that they are geared up to help the consumer out there to find that best deal. I love people. And, so what a privilege it is to work with a crowd that just, that's their dream. And we're going for this thing just to make more people having homes in South Africa. It's really a blessing. It's lovely. Love it.
Awesome. So Carl, I know you were in insurance before, but I mean, have you ever experienced anything like this that we're going through at the moment?
Adrian, I can look everybody in the eyes and say not even remotely. I mean, 2008, the financial crisis was really tough, and I think a lot of learnings from that point of view. But where we are today and what we've experienced over the past 3 months, almost 100 days, nothing could prepare us for that. And I think the world has just gone into this thing where we had to cope every day with what it came. And I think the biggest challenge for me was not knowing what the next day has in store. So you couldn't plan long in advance. And just that unknown was really, really tough. So yes, we're 100 days in and there's some time left for us that will still be challenging. Luckily with the lockdown, easing of the lockdown, we're certainly getting to a bit more normal and we can plan a little bit better, but certainly a tough time, an uneasy time for all of us. So many new things, working from home, Zoom calls, just connecting in a different level. It's just been a crazy time. Far less sleep and a little bit less hair, I think, at the end of the day.
Yeah, I can definitely vouch for that. Well, now that I finally had a haircut, at least it looks sort of semi-normal. Listen, tell me, so you guys work nationally, obviously. You work with the 4 major home loan banks. I know with some other banks as well from a home loan perspective. We're also a national company. That's why I think this question for you is really relevant. Is it, let's just get straight to it. Is it a good time to buy property right now, given what's happening with the economy as a result of COVID-19? What's your take on that?
I get asked this question quite a bit, and I think there's the short answer on this is yes. I think it is a good time to buy a home loan, and let me give you some of the examples or some of the factors that play such a big role at the moment. So we're seeing interest rates will be and we're currently seeing it as the biggest driver of the market currently. Lowest interest rate in 50 years, seeing the prime lending rate down to 7.25%. I mean, it's just, we haven't seen the borrowing cost so cheap in the past 50 years. A lot of more people are qualifying for bonds because their gross income now needs to be less to qualify because of the lower interest rates. The transfer duties, recently, just before lockdown, government changed that to 1 million rand, that threshold. So that makes it more affordable for customers. So I think, and to give proper advice on this, if you know that your income is secure, your job is secure, I think it's a very good time for you to consider buying a new home. There's certainly a lot of factors that plays in your favor to do that.
Yeah, I mean, I'm glad you said that because I echo the sentiments. I mean, specifically with interest rates being at a 50-year low. I mean, yes, I know at some point it's going to turn the corner and it's going to start going up. But all those factors you've mentioned, if you've got some sort of job security, if you've got a bit of cash stashed away, your negotiating power is also really strong. So I'm glad to hear it. But tell me, it's one thing saying it, it's another thing seeing it. So in terms of the numbers, so how is lockdown? We call it lockdown. I mean, it's had different levels, and I know you guys were allowed to operate at least some sort of capacity under alert level 4, and real estate had to wait till alert level 3. And by the way, now is probably a good time for me to mention that you guys, you and Rudy from BetterBond, were instrumental, along with the banks, in helping real estate to get out of lockdown as such. So a huge thank you. But how has lockdown affected your number of bond applications you've received? I mean, are you seeing demand from consumers now that restrictions have eased a little bit?
And it is, if there's one good news story to tell at this time, and I don't want to sound overly positive, but certainly in the numbers, and I mean, I want to show you some of these numbers that we're currently seeing. So, while we were in lockdown in, sort of end of March and April, our volumes of new applications for bonds, that dropped to around 70% of our volume of the same time last year. So obviously quite worried about that, but as expected, almost the whole country was in lockdown, then hard lockdown. And then in May, something very interesting started to happen. And if you can see on screen, you'll see some of these ratios. And what you'll see there is the red line is the percentage of our bonds that we did against last year. So the year-on-year comparison. And you can see from the beginning of May, even though real estate was still under lockdown, we could see those volumes increasing day by day.
Sure.
And towards the end of the month, doing almost, back to almost 70% of what we did last year, which was quite amazing because we knew that customers weren't able to see homes yet. But it's definitely a positive trend. Fast forward that into June, and we see a whole different story. We're now seeing volumes exceeding our last year's volumes by as much as, some days at 60, 70% more than what we did last year this time.
Jeez, that's phenomenal.
And it's just been amazing. So yes, is there a little bit of pent-up demand? I believe so. But it's certainly a very, very positive trend, and something we didn't expect.
Sure. Those numbers are big. I mean, our numbers are starting to get there, but those are proper numbers. So I'm encouraged by that. I mean, certainly, definitely encouraged by that. So let's take a hypothetical situation here. I've been renting for a while because, owning a home can be expensive and it's scary, and, I've got bond repayments and all these extra bits of pieces to worry about in home ownership. But is now a good time for me to get out of the renting space and into the home ownership space?
Adrian, I think it is. And, what is so-called the buyer's market at the moment, and again, I mentioned the low interest rates, creates that buyer's market to a large extent, that transfer duty threshold moving to R1 million, that's creating it again. So definitely, we're seeing a lot more customers, and it's typically first-time home buyers who are now considering owning a home. I think sort of the lockdown, what they've experienced there, they've realized how important the home is, together with all these other buyers market factors that we're currently seeing, is certainly a good reason for renters now to become homeowners. And we're seeing that in our numbers currently. We're seeing a lot more renters applying for home loans, so first-time home buyers typically. And that's very encouraging for us as a country going forward.
Awesome. So, one of the scary parts of home ownership is even pre-purchasing. It's will I actually get the bond? And I see that in a lot of talks I do, and a lot of forums, and you guys do it as well. And some people, they don't even start because they're just too scared to ask the bank, because they're not sure they'll actually get the bond approved by one of the 4 banks. So here's a question: in the current environment, are banks currently willing to work with clients, or are you seeing them currently, the lending criteria being tightened?
Yeah, Adrian, and I suppose that's one of my biggest concerns as we entered into this period, and partly driven by the 2008 financial crisis, where we know a big reason for those crash was around bonds and home loans, but we have a very different situation now. And what we've seen is that the bank's appetite for lending is still very strong. So very good news for us. And I think the competition between the banks are still strong. So banks are competing for the business. And, so that's all good. And we've seen a slight drop in our conversion ratio. And our conversion ratio is how many applications versus what the bank approves. We've seen a slight drop in that in March and April, or rather April and May. And that is as expected. So the banks are looking at certain industries which are a bit more harder hit, and they're pulling a little bit back on that lending, and we can expect that. Also, we've seen pre-lockdown a lot more 100% home loans given. We're also starting to see a slight change in that. So banks wanting a bit of a deposit, around 10% we're seeing currently. But while that can be expected, the conversion ratios are a slight drop to what we've seen. So very encouraging to see the banks still lending. And I must say, being very close to the banks in this period, the banks have been amazing in just in terms of helping us and assisting consumers. We've seen, all the payment relief that they've given. So I think the banks have really, really played their part in this period, and they have that responsibility of ensuring there's liquidity in the market. And we're seeing the banks playing that game. So really, really positive news at this stage.
Well, that's good. I mean, because it was a completely different story in 2008, and no one's fault really. Well, yes, it was a few people's fault. It was some of the bankers in the US that caused all of our issues around the world. But then it was a bloodbath. I remember loans were hard to come by, and banks weren't lending, and you couldn't get access to money. And it's a completely different situation right now, which is encouraging. But let's say I do get a bond, or I have one. And I've had one for a while. I mean, people talk about fixing interest rates. And I think there's sometimes a misconception of, for example, how long can I fix the interest rate for? Is it the whole period? And is it worth it? And I know there's this debate around it, but I'd be keen to hear your opinion on whether buyers should be looking at fixing interest rates.
Yeah, and again, there's one of those questions that a lot of people are asking at the moment, especially with the interest rates, so low. Is it a good time? So I think there's a couple of things that buyers or existing homeowners should consider when fixing the interest rate. At the moment, is the interest rate at the lowest it will be? We don't know yet. Some of the economists are telling us that we're still expecting a little bit of a drop. So that's something to consider. And we don't see in general many customers fixing the interest rates at this point. And there's a couple of reasons for that. So firstly, if the bank fix your interest rate, they will only do that after registration. So when you're a new buyer, they won't do that upfront. You can only apply for that fixed interest rate after the bond has been registered and the property has been transferred. And more often than not, they will fix that interest rate at a higher rate than what it is now. And so you might lose out a little bit, but then the view is, can you save money over the long term? They typically don't fix those interest rates for a long period of time. So I've seen maximum 5 years where they fix the interest rate, and then you'll go back to that variable interest rate. Our experience, and this is really from our past experience, is that over the long term, that 20-year bond, it is often much better to have a variable interest rate rather than this fixed interest rate. But then again, you must look at your personal circumstances. A lot of first-time home buyers especially are looking for that security, saying, I know how much my budget is, and I want to know that I'm guaranteed on that. And therefore, I would suggest that, but just know that there are a couple of factors that you need to take into account, especially the period of time, and that it will be fixed at a bit of a higher rate than what the variable rate is currently.
Yeah, and normally those percentages can be quite high, X +3 or possibly +4%, depending on the bank's appetite in terms of fixing. So I guess if you're going to do it, you need to almost be sure, and who knows, but you need to almost be sure that interest rates are going to be climbing really fast if you're going to take advantage of that. And I do see it turning, but I don't see a massive spike in the next few months or even years. So yeah, thanks for that. So I wanted to ask you about pre-qualification. You hear people talk about pre-qualification, and for those that don't know what that means, it's when you want to buy a home, it's understanding what you can actually afford. So how do you guys assist when it comes to pre-qualification?
Adrian, yes, and I mean, our numbers have also been quite staggering around, customers wanting pre-qualifications, and I think it's partly due to, driven by real estate saying, now that I can't take as many customers out at one time to see a home, I want to take customers that I know that can afford it. So that's from an industry point of view, and more and more people are saying, well, I want to buy a new home. Let me see what I can afford, and And with us, we do that pre-qualification, and there are sort of two types of pre-qualifications. One is sort of a quick one where we just take your credit score, take your financial situation, and then we give you a estimate on what you can afford, but we don't go into too much detail on that. And the other part of it is affordability assessment, where we ask for all your pay slip and your income and expenditure, and we do a proper analysis around what you can afford. And we issue you with a pre-qualification certificate. And that's gold in a customer's hands or in a buyer's hands, because then he knows exactly what he can afford. And there's a high chance in our case, there's a 90% chance that the bank will approve that customer when we get to the final grant of that. So it's really being driven by those two factors at the moment, and it's just a great way of buying a home. Why go look at a house that you would love, that it's typically much more than what you can afford, and then you get disappointed. So get pre-qualified up front, and then everybody knows exactly what you can afford.
Brilliant. Now, I read a stat of yours, of BetterBonds, saying that in May, and I think part of June as well, approximately 70% of your applications have been first-time buyers. So people wanting to get into the game, which is really cool to see. I must be honest. I'm really encouraged by that, because as we know, South Africa, to own a home is a dream. It's a wealth creation and generator. So you must obviously be appreciating that. I want to know, do you see the trend continuing over the next few months?
I do, absolutely. From pre-lockdown levels, we've seen first-time home buyers being in the mix of our business around 50, sort of creeping up to 60% of our volumes. To your point, and correctly said so, that's moved up now in May up to 70% of our volume are first-time home buyers. Will that still increase? I think there's still some room for a bit of improvement there. Maybe it doesn't go to 80%, but we are seeing a very healthy move of people now entering the market as first-time home buyers because they can afford it. The likelihood of affordability is more, and more new people are coming into the market. So it's really some good news, and expecting that to increase in the months to come. Yeah.
So I guess if you're an agent, and depending on where you are in the country, first-time home has a different price in Cape Town to Joburg to Bloemfontein. But if you're listening to this, hopefully your ears have perked, because you should probably be focusing on those price points. If that's where most of the applications are coming through and where most of the financing is happening, that's probably a place you want to be playing in as a real estate agent for the next few months. Would you agree with that?
I agree with that 100%, Adrian. I think, it's now about, in real estate, it's about clever, targeting your customers, in that intelligent way. And I think this is a great opportunity to do so. Definitely we're seeing that, I think in the BetterLife group, we constitute about 30% of the country's volumes. So it's a good indication of what the first-time home buying market is doing. We're also seeing a lot of developments currently coming up, and you can see a lot of these first-time home buyers buying in those complexes or secured villages, because that's what they need right now.
Yeah, it's interesting. I did an interview for one of the developers. I don't want to mention the name, otherwise people get upset when I don't mention all the names. But I did an interview for a developer not too long ago, and it was a talk about the north coast of KZN. And it got me thinking, because actually, it could apply to anywhere in the country. If we're currently going to be working slightly differently, when I say we, I mean most of the country. Here we are doing a Zoom call. You're sitting in Gauteng, I'm sitting in Cape Town. I know you said earlier I have a lot of flights. It's probably going to be a lot less in the future, because there'll be a lot more of this technology. And this is a big if the individual is able to do 70% of what they used to do from a home base and 30% from the office, that might change purchasing actually. So they were talking about the North Coast. So in the past, in Gauteng, your Varlies up there used to buy your holiday home in Belito, for example, on the North Coast, and then long weekends and holidays, bring the kids down. Whereas if this is a new normal, there could be the potential where your primary home is, let's just say Belito, that's just an example, but your primary home is wherever you want it to be. But using technology, you're able to still do what you need to do. So it's going to be interesting to see how that plays out over the next few months and years.
Yeah, I don't know. I mean, I'll also look at that very, very closely in the coming months, because I do think people's behavior and their need for what type of home they want will change. I mean, one of my biggest challenges initially, and I was one of those who had to move during the lockdown period because I sold my house just before lockdown. So I was one of those who moved. And my biggest criteria for a new home in this period was a study, because in my previous home there wasn't enough space for a study, and so people will start thinking about their homes a little bit differently. Also, how far you are from your office. Do we think offices will look different in this new world? I certainly think so. And you'll need to get to the office. So you might want to feel comfortable in staying a little bit further, because you don't have to travel as much. And the days that you travel, you're fine to do that. So it's certainly some very interesting trends that we will need to track very closely as we get out of this sort of chaos that we've been exposed to the past couple of months.
Definitely, we're all learning how to use this technology. So I think maybe it won't replace what we currently do, but it'll certainly become a blend of what we've been doing in the past, or with what we've been doing in the past, I should say. So let me end on a home run question for you. You have to pull out your magic 8-ball or crystal ball for this one, Carl. But you do have some insights with all your numbers and statistics and looking at the past. What are from a housing perspective, what are your predictions for the future? I mean, do you see the market recovering? Because at the beginning of the year, we had a slight recovery. We started to see a slight recovery. And how do homeowners or buyers and sellers survive in this period? What is your advice to them?
Yeah, Adrian, and like you say, it's sort of that crystal ball. But certainly what I'm seeing now from what we expected and forecasted in the beginning of this pandemic around how the market will recover versus what we are seeing now is two different worlds. And yes, that is very, very positive at the moment. So we're seeing a much quicker recovery. And yes, there's a bit of pent-up demand, as I said earlier. And I think sort of in the next 2 months, we'll see what we can expect the normal volumes of this new world of ours would be. But I do expect the market to recover. Yes, it will have its challenges. Unfortunately, in the news, we are seeing a bit more of the bigger corporates that are having to retrench people. So, still some tough times ahead. But, in terms of the property market, we've seen this in for the past 20 years, that property remains a very good investment. So yes, maybe not something that you want to flip overnight, and that's not the idea of property. But over the long period, still remains a very good investment. And I think for that reason, buyers and sellers, there'll still be some good market activity. Expecting this market to recover a little bit quicker than what we initially anticipated, but we'll still feel the pain of the economy for the next year or two. I've no doubt on that. But certainly all the positive things coming out of this. We're also seeing investors, being quite attracted to this market. So certainly some movement there. And if you ask me what advice can I give to people in the meantime, so I think the banks have been quite accommodating in terms of your finances. So getting some payment relief. And I think a lot of people have taken up that offer. So for now, I think just really focus on where you spend. And as this market recover, look about the great opportunities that will be there, and just think about it properly. If you have a nice secured income, consider property. I think it is a good solution for you for a long-term sort of wealth creation in your world.
I fully agree. I remember interviewing Anthony van Rett about a month ago, and he said when he was younger, he asked his mentor in real estate, when's a good time to buy? And the answer was about 10 to 15 years ago. So I think that's what property really is about, and it's true. So for all those who are watching who are thinking of getting into the game, the interest rate hasn't been better in 50 years. The market is probably, certainly from a buyer's point of view, probably the best it's been in roughly 30 to 35 years. The banks are willing to lend. First-time buyers, 70% of them, 70% of the business have come into the market. If you're an agent, it's a great time to be operating at the moment. It all depends on how you look at it. Your glass half full or your glass half empty. Carl, it's been great having you on the call. I really appreciate you making the time for us. And yeah, we certainly look forward to working with you and sending you a whole lot more applications.
Adrian, thank you very much, and thank you for this great opportunity. And yeah, I want to wish you the best of luck as we come out of this and as we're trying to get the industry back on their feet. And yeah, and thank you for everything you have done in this time. I think you've been an exceptional leader. And yeah, continue. We will, together we will continue to do what we do, and looking forward to do that. Thanks very much for the opportunity.
Awesome. Thanks, Carl. Well, there you have it, folks. I hope you have a good rest of your day and rest of your week, and we'll catch you next time on Time Out with Remax. Bye.